Welcome to Norway Perspectives, brought to you by Norway Relocation Group. Today we are going to talk about one of the most important and most frequently misunderstood responsibilities you have as a resident of Norway. It's a topic that can seem dry and technical, but getting it wrong can have profound and lasting consequences for your financial health, your peace of mind, and even your legal right to stay in the country. This episode is about reporting your income to the Norwegian tax authorities, and more specifically, what goes wrong when you don't do it correctly. You might think that as long as you have an employer who deducts tax from your salary, you're in the clear. You might assume the system is automatic. But in Norway, the tax system is built on a foundational principle of personal responsibility. It trusts you to be honest, but it requires you to be actively involved. Failing to understand your role in this system can lead to a cascade of problems. Staggering surprise tax bills that arrive a year later, hefty fines and penalty interest, the loss of a tax refund you were counting on, and in more serious cases, debt collection, legal penalties, and a negative mark on your record that can complicate your immigration future. And perhaps the most unsettling part is that most newcomers don't even realize they've made a mistake until the system catches up with them, sometimes months or even years down the line. So today, we are going to create a comprehensive guide. We will leave no stone unturned. We will cover what the word income truly means under Norwegian law, because it includes far more than just your monthly salary. How income from various sources, side jobs, freelance work, rental properties, and money earned abroad must be declared. Why the famous pre-filled Norwegian tax return is one of the most dangerous traps for the uninformed taxpayer. The serious consequences of not submitting your tax return at all, even if you think you have nothing to add. How Norway's digital systems, NAV, Altinn, and the tax administration share information with each other, and increasingly with banks and tax authorities in other countries. And most importantly, we will give you the knowledge you need to protect yourself, legally, financially, and within the immigration system. Let's begin our journey by dismantling the single most dangerous assumption a newcomer can make: the myth that your employer handles everything. If you come from a country where your employer's payroll department handles the entirety of your tax obligations, the Norwegian system can be misleading. Yes, it's true that your employer in Norway has a legal duty to deduct tax from your salary each month based on your tax card and to report that income to the authorities. This is a robust system, and for a simple salaried employee with no other financial complexity, it works well. But this is where the employer's responsibility ends and yours begins. You, the individual taxpayer, are ultimately and legally responsible for the accuracy of your total annual tax assessment. This responsibility includes several active steps. First, at the beginning of each year, you are responsible for checking your tax card, the skattekort. This is not just a formality. The tax card is an estimate of how much tax you should pay, based on your projected income for the coming year. For newcomers, this estimate is often just a guess by the tax office, as they have no prior income history for you in Norway. If the estimate is too low, you will underpay tax every month and be hit with a massive bill, a backsmell, the following year. If it's too high, you are essentially giving the government an interest-free loan until you get a refund. You must log into the tax administration's website and adjust this estimate to reflect your actual expected earnings. This is your first and most important act of financial self-defense for the year. Second, in the springtime, you are responsible for logging into the secure government portal at the Altinn to find and meticulously review your annual tax return, the skattemelding. You must check every single line item. Third, and this is the crucial part, you are responsible for correcting any mistakes and, most importantly, declaring all additional income that the tax office does not already know about. Finally, you must digitally submit the corrected return by the deadline. If you do nothing, the system considers your silence as an active confirmation that the pre-filled information is 100% correct and complete. If it is not, and the tax administration discovers this later, you will be held responsible for the error and will likely face penalties. We have consulted with newcomers who have found themselves owing 20,000, 30,000, or even more in back taxes, simply because they didn't realize that their income from a small freelance side job or a student scholarship needed to be manually added to their tax return. This brings us to a fundamental question. What exactly counts as income in Norway? The definition is far broader than you might think. Of course, your primary salary is the main component. But under Norwegian law, taxable income includes almost any form of economic benefit you receive. This includes part-time and secondary jobs. If you have a weekend job in a cafe or work a few hours for another company, that income must be reported. Freelance or self-employed work. This is a major area of non-compliance. Any income you receive for services where you are not on a formal payroll is your responsibility to declare. This includes everything from high-level IT consulting to teaching private language lessons, writing articles, or design work. Rental income. If you own property and rent it out, that rental income is taxable. There are specific, complex rules if you are renting out a portion of the home you also live in, but if you own a separate property that you rent out, the net income is taxable and must be declared. This applies equally to long-term rentals and short-term rentals through platforms like Airbnb. Income from abroad. This is a critical point for a globalized workforce. If you are a tax resident in Norway, your worldwide income is generally taxable here. This means that if you are living in Oslo but doing remote programming work for a company in Germany, that income is taxable in Norway. We will return to this in more detail. Scholarships and grants. While some educational grants are exempt, many are considered taxable income, especially those intended to cover living expenses rather than specific tuition fees. Income from business activities. If you sell goods or services online, whether through a platform like Finn.no or through your own e-commerce site, the profit is taxable income. Capital gains. Profit from the sale of stocks, mutual funds, and especially cryptocurrency is considered taxable income and is an area the tax administration is focusing on heavily. Paid side gigs. Even informal work, like helping a neighbor with renovations for cash or being paid for a performance at a local event, legally constitutes taxable income. The core principle is this: if you earned money and an employer did not report it and withhold tax on your behalf, the legal burden to declare that income falls squarely on your shoulders. The immediate consequences of not reporting might seem non-existent, but the Norwegian tax system has a long memory. When an undeclared income stream is eventually flagged, often through a data match or an audit years later, you will be contacted and asked to pay not only the original tax owed, but also a significant penalty tax and interest on the overdue amount. This leads us to the main event of the tax year, the tax return itself. Each spring, usually around late March or early April, you will receive a notification in your digital mailbox. It will say that your tax return, your skattemelding, is ready for review in the Altinn portal. When you log in, you will see a document that looks polished and complete. It will have your salary from your employer filled in, your bank account balances, and your mortgage debt. It might even display a calculation at the end showing you are due a refund. And you might see a message that says, if all information is correct, no action is required. This message is perhaps the most dangerous phrase in the entire Norwegian tax system for a newcomer. That message is based only on the third-party information the tax administration has already received. It cannot possibly know about the freelance work you did, the apartment you rented out, or the remote income you received from abroad. When you do nothing, you are legally affirming, under penalty of law, that this incomplete draft is the full and accurate story of your financial life for the previous year. That is why you must treat the pre-filled return as nothing more than a starting point. Your job is to check every line meticulously, compare the reported salary with your own records and payslips, add what is missing. This is where you declare your freelance income, your rental income, or any other source of revenue. Correct any errors. Perhaps your employer reported an incorrect number. It is your job to fix it. Claim your rightful deductions. The system is not just about paying tax, it's about paying the correct tax. The pre-filled return may not include all the deductions you are entitled to. This includes deductions for interest paid on all debt, gjeldsrente, deductions for travel expenses to and from work if they exceed a certain threshold, reisefradrag, special deductions for parents of young children, foreldrefradrag, and membership fees for labor unions. Claiming these can significantly reduce your tax burden, but you must add them yourself. Submit the return. Once you have made your corrections and additions, you must formally submit the return. Only then is your legal duty fulfilled. What happens if you don't submit it at all? If you ignore the notifications and the deadline passes, the tax administration will eventually finalize your return based on the incomplete data they have. This could mean you miss out on thousands of kroner in deductions, leading you to overpay tax. Or if you had undeclared income, it means you have failed to comply, and your file may be flagged for a future audit. A fine for late submission can also be imposed. And again, the system will not chase you with phone calls. All communication is digital. If you're not actively monitoring your Altinn and Digipost inboxes, you will be operating in the dark. This is where the consequences begin to move beyond the purely financial and into the realm of your legal status in the country. This is one of the most overlooked and most serious aspects of tax compliance for foreign nationals.
When you apply for a renewal of a work permit or for major milestones like permanent residency or Norwegian citizenship, the Norwegian Directorate of Immigration, UDI, will conduct a thorough review of your history in the country. A key part of this review is an assessment of your financial stability and your adherence to Norwegian laws. UDI and the tax administration share information. Your digital tax file effectively becomes a part of your immigration file. If your tax history shows a pattern of non-compliance, undeclared income, significant unpaid tax debt, or penalties for incorrect reporting, it can raise serious red flags for the immigration authorities. They use your tax returns to verify several key requirements.
Illegal income. Does your officially declared income meet the minimum requirements for your permit type? If a large portion of your actual income was from undeclared freelance work, your official record might show an income that is too low to qualify for permanent residency. Self-sufficiency. Are you supporting yourself through legal and reported means? A messy tax history can cast doubt on this. Good conduct. While minor mistakes are usually not disqualifying, a history that suggests intentional tax evasion can be interpreted as a failure to demonstrate the good conduct required for citizenship. We have seen applications for permanent residency get delayed or even denied because the applicant's tax return did not accurately reflect their true financial situation. Imagine the devastating outcome of having your family's future in Norway jeopardized, not by a major crime, but by a failure to correctly declare a few side projects on a tax form years earlier. The international dimension adds another layer of complexity. If you live in Norway for more than 183 days in a year, you are generally considered a tax resident. This means you are, in principle, liable to pay tax to Norway on your worldwide income. This comes as a shock to many. That remote job you kept with a company back home? That income is likely taxable in Norway. The rental income from the apartment you still own in your home country. That may also need to be reported in Norway. Now, to prevent you from being taxed twice on the same income, Norway has tax treaties with many countries. But these treaties do not mean you can simply ignore the foreign income. The correct procedure is to declare the foreign income on your Norwegian tax return, and then, in a separate section, claim a deduction based on the tax treaty. Furthermore, under international agreements, like the Common Reporting Standard, Over 100 countries now automatically exchange financial information. This means that Norwegian tax authorities are increasingly likely to receive information about the bank accounts and income you have abroad. If they receive this information and see that you have not declared it on your Norwegian return, you will face a serious inquiry. If you realize now that you have made a mistake in a previous year, you forgot to report something, you entered an incorrect figure, or you never submitted your return at all, do not panic, but you must act. The Norwegian tax system has a mechanism for voluntary correction. You can go back into Altinn and amend your tax returns for up to 3 years back. By coming forward voluntarily to correct the mistake, you demonstrate good faith and significantly reduce the risk of facing the harshest penalties. The worst possible strategy is to wait and hope you are not discovered. In conclusion, we return to our central theme. In Norway, the tax system is a profound expression of the social contract. It is built on a foundation of trust, but it is reinforced by a strict system of accountability. The government trusts you to be an active and honest participant. It trusts you to read your digital mail, to understand what constitutes your income, to declare what is required, and to take responsibility for correcting your mistakes. When you fail to uphold your end of this bargain, that trust is broken, and the consequences can ripple out, touching not just your finances, but your legal and residential security. Don't let small oversights or a lack of knowledge today become a major problem for you and your family tomorrow. Take control of your financial story. Be the diligent author of your own tax return. At Norway Relocation Group, we provide professional guidance to help newcomers navigate this complex terrain. We can help you understand your income reporting obligations, review your tax return, and avoid the common pitfalls that can affect your long-term residency. And at our partner school, NLS Norwegian Language School, we focus on teaching the real-world Norwegian that you will encounter in these official documents. We empower you to read the letters from the tax administration, to understand the forms in Altinn, and to handle your own financial and legal affairs with confidence. For professional support, visit norwayrelocation.no. To build the language skills you need for true digital and financial independence in Norway, visit nlsnorwegian.no. Thank you for joining us for this in-depth look at income reporting in Norway. Please like, subscribe, and share this episode with anyone you know who is working, freelancing, or living in this beautiful but complex country. As always, we'll see you in the next one.